Good morning, traders. Welcome to the live stream. My name is Charles Gough. I come from a community called Pirate Traders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. What the heck is the two-way auction process, you say? Well, that is a way to diagnose the market-generated information. That is basically just where the market goes and what it does in a way that you can make predictions about what it might do next. So I'm going to start this morning by giving us kind of a bigger picture view of what's happening with the market here. And then we can zoom in and try to look for opportunities to take trades intraday based on that information. So first and foremost, the market is in balance. What does that mean when we say the market is in balance? Well, there's two different phases that the market can have. It can have balance, where it's going sideways in a range, or it can have momentum, where it's going in a certain direction. Okay, so momentum is just like going straight one way. Balance is going sideways like that. Okay. So right now the market is in balance. We know that because Friday's range was completely inside Thursday's range. Okay. This is Thursday's range and this is Friday's. And you can see the overnight on Thursday night stayed stuck inside the same place as Thursday. Friday's range stayed inside the exact same place as the overnight on Thursday night. And that's just the market's way of telling us it doesn't know what to do next. There's no clear decision. The bulls are not in charge. The bears are not in charge. Everybody's just kind of waiting for that next, big macro event, that next big thing that is going to cause the market to move one way or another. So generally speaking, today we're going to open up inside Friday's range. Generally speaking, that means we have no edge this morning. We got to kind of wait and see. It could just do it again. It could just go sideways inside this range all day. We really got to wait for the market to get above Friday's high and get new buying before we can really assume it's going to make a big move to the upside, or wait for it to get below Friday's low and get new selling before it's going to get momentum to the downside. Okay, inside Friday's range, it's probably just going to keep going sideways. But I have some good news. And that good news is we do have a little bit of an edge. That edge is right here. This right here. This is what we call a liquidation break. Essentially, that is when you squeeze buyers. You take out what we call weak hand buyers and you bring in stronger hand buyers. Okay? And if the market drops like this and then turns around and comes right back up to where it started from, which let's just say that was Friday's closing price. So you dip down, you turn around, you come back up. That sort of reversal actually strengthens a market. It actually increases the odds that the market is going to go up after that happens, because you shake out weak hands. So you shake out the buyers that were buying this extremely weak low on Friday, right? You take them out of the market, but then who the heck is buying as this market is dipping? Well, stronger hands, right? People that buy dips, people that stay in trades for longer. Also, if you bought the low on Friday and you open inside Friday's range today, you're probably not feeling that bullish, right? You're probably like, ooh, I don't know if I want to hold on to this trade. But if you bought down here in the overnight, if you bought this dip right now where the market opens, you're feeling great. You're feeling very bullish. You have no reason to take profits because you're way up and you feel good and you want it to keep going. So that sort of mental mechanism of squeezing out the weaker hands traders and bringing in the stronger hand traders often strengthens a market. Good morning, traders. Welcome to the And so essentially this morning, what should we be expecting the market to do today? We should be expecting it to go up. It should be able to get above the overnight high and keep going to the previous day's high. When it gets above Friday's high, it should be able to keep going and get above Thursday's high. So if we see that happen today, what should we be? We should be bullish, right? Because we got piece of information after piece of information telling us the market is going to go up. We got the liquidation break. That's piece of information 1. We got the support above the overnight high. That's piece of information 2. We got support above the previous day's high. That's piece of information 3. So we should be bullish this morning, more so than bearish, because that is the higher probability that the market would go up rather than down. But what if it doesn't? Right? If you were in my brigade, if you were in the Pirate Traders Brigade and you read the email from Friday that I sent out, when I talked about if we got below Thursday's low on Friday, one of the downside targets that I had was 68.83. That was the second downside target where I thought the market was going to go to. Okay. So that liquidation went about as far as it was going to go. That was where we expected buyers to step in. But if the market doesn't go up today and instead it starts going down, guess what? This was not far enough down. That's the information the market is giving us. It wasn't a big enough dip to change the momentum. So essentially, we should start off the day more bullish than bearish, really sort of in the neutral zone, but more bullish than bearish, right? But if we start to get below Friday's low, we want to get very, very bearish very, very quick, because the odds are if we get below Friday's low and we get new selling, we're at, almost certainly heading to that overnight low, if not much lower. Okay. And if not today, in the days ahead. So that to me is an edge, even though, yes, technically we're neutral. We're inside the previous day's range and it could go up or down from here. It's knowing the follow through that's coming. It's knowing that if this market can get above yesterday's high and get support, it's got potential to really make a move as a breakout of balance. Or that if the market gets below yesterday's low and it gets resistance, it's got a big move because we're going to shake out these hands right here. And we're going to take the market much lower. That's a great edge, because all I need as a trader right now is patience. That's it. All I have to do is just be patient. Just wait until the market tells me, is it going higher or is it going lower? And then there'll be a great opportunity. Whereas I did not feel that on Friday. Who knew? Maybe we got a big move. Maybe we went nowhere. We could have broken out of, Friday's low and turned around and come right back up. Thursday's low and come right back up. We could have got above Thursday's high and come right back down for all we knew. But now the situation has changed. Now the edge is in favor of the buyers. And so if they don't get it, if the market doesn't go up, they're going to get squeezed and the market's going to go down. So I do not think we are going to have another sideways day inside yesterday's range where we go nowhere. I think we will explore either Friday's high or Friday's low. And when we do, we'll find out what comes next. Now, if we get to Friday's high or Thursday's high, we could say either of these levels, so 64 or 69. If we get there and we come up and then we fail and we come back in, that will tell us we're going to have a sideways day for the rest of the day from that point on. And if we do get below Friday's low, Thursday and Friday's low, and then turn around and come back up, that is actually very bullish as well. So I would say sideways day, but with the potential of even making a move higher towards the end of the day. But as I said, those scenarios to me, the look above or look below and fail of Friday's range, are less likely today, because we have wound this jack in the box up and it's ready to burst. And so I suspect when we get to Friday's high or low, we're going to get new buying or selling there, and we're going to continue in whatever direction we go. So I would describe myself as neutral to bullish this morning, leaning a little more bullish, but not willing to go long right this minute. I'm going to need to see the market, give me a clear sign of its momentum before I do that. Okay. As far as a chop zone is concerned, those of you that trade with the brigade, you know what chop zones are. You know how I use them. It's basically just a way to create a range for the beginning of the day where I'm not going to allow my emotions to get me into a trade. I'm not going to just jump into it because I feel like it, because, oh my God, look at how it's moving. I got to get in a trade. That's a range where I force myself to be patient and wait until I am certain about my edge before I enter the trade. Once we're out of the chop zone, then it's all fun. But inside the chop zone, patience is key. So for me this morning, the chop zone is going to be Friday's low, 69.25, to whatever the overnight high is. We still got another 20 minutes, so they could make it higher than this. It may end up being all of Friday's range. That just means for the first hour, we're going to be very patient. We're going to let them kind of chop around in here, because they don't know yet which way they're going to break. And we're just going to keep in mind that once that first hour is done, then whatever break happens after that is likely to get follow through. Okay? If you have any questions on any of my analysis or anything at all, really, let me know. You can jump into the chat and you can let me know in the YouTube chat. Or if you're in the Discord, you can just go to the Futures-Charles tab and you can leave your questions there. Questions, comments, concerns, criticisms. If you are watching this on the YouTube and you haven't smashed that thumbs up button yet, I really would appreciate it. If you give me that little thummy thumb in the uppy up. That sounded perverted. I didn't mean it like that. I just meant like a like button, not whatever you just thought when I said that. Good morning to Trevor. Welcome. Rich is here. Rajim says, I think it reverses below Friday's high. I think we will reverse below Friday's high. I'm not sure I understand. I guess you mean above Friday's high, right? Because we're below Friday's high right now. So if we got to Friday's high, we wouldn't be reversing. But it sounds like what you're describing is what we call look above and fail, which means you think we're going to push up there and then run out of steam and come back down. Yes, that is absolutely a possibility. And if you were watching my live stream on Friday, I was describing that as a very, very high probability on Friday. I was saying if we got above Thursday's range, we'd probably come back in. If we got below Thursday's low, we'd probably come back in. What I'm trying to explain to you today, though, is today is not Friday. Today is a whole new day, and the information has changed. And essentially, we've already done it on the downside. We already tried the look below, and we failed, which means we're going higher. They just did it over the weekend rather than doing it during the regular trading hours. But I will absolutely concede, and I need to be crystal clear about this so you all understand, as long as we're still inside this range, it is still balanced. The market is still going sideways. It's just, I believe, and I'm guessing here, that today is the day we're going to break out of this balance and make the move. But it is absolutely possible that we just keep going. We just keep going sideways here. And we'll just take it one tick at a time and see what the market gives us. If you are looking for a trade like that, you're thinking, I want to go short near Friday's high because I think it's going to flip in reverse. What you want to look at the TPOs for is something that looks like this. Do you see how we made these previous highs in this exact same area? Well, let's look at what that looks like visually to us using the TPOs. Okay. We can see that on the cumulative volume, it tapered off right there. Okay. We can see where the overnight high was on Wednesday night of last week, right? That's where they ran out of steam. Well, then let's look at Thursday's range, right? What happened above Thursday's, above the overnight high? Tapered off in time, tapered off in volume. Do you see that? Same place as before. It tapered off. What happened that night on Thursday night? Same thing. Taper off in time, taper off in volume. Same place. What happened on Friday? Taper off in time, taper off in volume. Same place. So if you're looking for that trade today, that's all you need to look for. You need to watch what happens as the market pushes up there. You're not going to have taper with time right away, obviously, because you haven't spent much time. So the first thing you're going to look for is a taper in volume. As the market is pushing up, is there less and less and less contracts trading? If there's fewer and fewer contracts trading, that increases the odds it's going to turn around and come back down. Okay? So that's what you'll be watching for is the taper. You also want to pay attention to the tempo, right? In all of these cases, when the market came up here, it slowed down. It came up here really fast. Boom, 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 boom. And then it just came to a screeching halt right there. And then it started going real slow. That's the other thing you want to look for. You want to look for a change in tempo in this same area, right? Does it push up and start to slow down up there? Or does it push up and it just keeps going? And then it comes back down and finds support and it just keeps going. That's what you want to look for. Changes in volume, changes in tempo. And if you see them, then that short is perfectly acceptable. Although, as I said, in my opinion, less likely to work today. That is purely based on the liquidation break. Now, we're looking at order flow over here on the right side of the screen. If you don't know what order flow is, essentially the volume profile that you're seeing on the left side of the screen, which is my market profile chart, that's the actual number of contracts that traded when the market was at that particular level. What you're seeing over here on the right side, this is the liquidity. This is the contracts that will trade when we get to those levels, or should if they don't spoof it. So by being able to see how they're changing liquidity, we can make predictions about what the market is going to do literally over the next few minutes. Those changes of liquidity, speaking of which, this is a fun one. They just turned off the bracket bots. So somebody just, arrived at their office in Manhattan and finally pushed the button. They made sure to do it before the market opened. And now those bracket bots are off. And these bracket bots are a huge pain in the ass. And so I'm happy to see that they turned them off before the market opened. So now what are we looking at? Well, right now we have liquidity above price. So that should be the target. The market should start to work its way up towards 69.60 unless something changes with the order flow. What if suddenly a bunch of volume starts to build up below price? What if suddenly this volume or this liquidity that we're targeting above price just disappears? Poof. Then that's a change in the market. Then it's no longer going to go up. Now it's going to turn around and go down. So by paying attention to those changes in order flow as they take place, we have an edge in entering our trades. Any questions on any of that from the chat? Meat says, good morning. What is the program on the left side of the screen? It is called Window Trader. Window Trader is a market profile software. So it basically just combines volume profile, which is the column that has the little volume, and TPOs, which is the letters. And TPOs are basically the same thing as candlesticks. Is like a 30-minute candlestick. So I'll expand out Friday's range so you can see this. For those that are new, so you can see each one of these letters basically represents 30 minutes, like a 30-minute candlestick. So you got your A period, your B, your C, so on and so forth. Okay. And the reason that we put them in a profile is if you can take all of this and you can smush it together, which we call collapsing the profile, well, then you can clearly see the areas where there's changes, right? Where the market runs out of steam. You can clearly see those areas where something is changing because you have fewer and fewer letters in those areas. And that's where you look for something to change the next time. Right? That's why I just said this morning, if you think we're going to keep doing what we did on Thursday and Friday, you want to look for the same thing to happen again. You want to look for the market to taper off up there and come back down. But if something's going to change today, if today we're going to go higher, if today we're going to break out of this balance area, well, then what is that going to look like? We're going to get up there and we're going to start to see volume up there. Right? We're going to start to see big, pink candles up there, not white ones. Because the darker the color, the more volume. Okay. And we're going to see that the TPOs get up there, and instead of coming back down and spending time down here, those TPOs are going to get up there and they're going to spend time up there. And so if we see that we're bringing in volume and we're spending time, we know the market is going to keep going. And you can technically see that on candlesticks. It's just much harder to visualize those exact areas where the stuff changes as it is when you collapse it on a TPO. The software, as I said, is called Window Trader. It's very expensive. It's pretty much the most expensive software you can buy for TPOs. So if you're new, you don't have to use this. Just Google whatever broker or charting platform you currently use and just type in TPOs and see if they have it or find somebody else that does. There's a lot of very cheap options available now if you're looking to get into TPOs. Spoo says overnight is such low volume. We can really believe in that move. We're essentially operating in value and not far from previous close. So not much has changed. No, correct. So let me go back. Let me rewind the clock and kind of rephrase this, because it seems like you guys are overemphasizing the liquidation break. The market is in balance. We should assume the market is in balance. Okay? Meaning we should assume it's going to keep going sideways. However, if we want to make money, we have to be ready when the next change happens. If it's going to break out of balance, we want to be mentally prepared to take a trade for it to break out of balance. So as I said, on Friday, I did not think it was going to break out. I thought we were going to stay in Thursday's range or poke below and come back in, right? But today I don't feel the same. And again, I'm predicting the future right now. I'm not saying this is for sure going to happen, but I'm saying I believe that either the market is going to go higher today, meaning we will close somewhere above Thursday's high, or the market is going to go lower today, meaning we will close somewhere below Thursday and Friday's low. I do not believe we are going to close inside Friday's range today. And I would believe we were going to close inside Friday's range if this had not had happened. Now, you are correct. It's on thin volume. As a matter of fact, the overnight is always thin volume compared to the regular trading hours. But that's not what I'm paying attention to. I'm talking about human beings and their emotional reactions to things. I'm talking about the difference between being a buyer on Friday and being a buyer today. Today, the odds are much better in your favor because of the liquidation break. And the cool thing is what we talked about, which is the when what should happens doesn't. Right? On Friday, if we'd have gotten below Thursday's low, anything could have happened, right? Like we could have got below Thursday's low and just gone down 10 points and come right back up. But because of the liquidation break, if we don't go up today, if we don't get above Friday's high and we come back down for Friday's low, we know this market is going to go much lower. How do we know? It already happened. All right. So we already know these are weak hands. We already know if we get down there, this thing is going to go. It's going to make a big move. That's our edge. So our edge is not in knowing right now, is the market going to go up or down? That's not our edge. Our edge is in knowing exactly what to look for as we get to the upper end of balance. And if I see it tapering off, you better believe I would short to come back in. Even though I right now at this moment have a bullish bias or slightly more bullish bias than bearish. I'm still neutral, right? But just slightly more bullish. Even though I am now slightly more bullish, if I see that volume tapering off and I see that we're not spending time and I see that the tempo is slowing down, you better believe I'm happy to see it as more balance. Okay. But I'm just preparing for what I think is more likely, which is I think it is more likely that it would keep going. Okay. But you are absolutely correct that we are opening inside the previous day's range, inside the previous day's, value area. So before we get to the high or the low, we're probably going to go sideways for a long time, maybe even for hours, which is why I said this morning, the mental preparation for the day is, Charles, be patient, relax. You don't have to force trades first thing in the morning. You know, this thing might go sideways for hours inside of here before it finally makes its break. And you know, there's a great opportunity when it makes its break. You know, you don't have to diddle in the middle. You don't have to fight for every little tick today. You can just be patient and wait, because when we get to the edge of the range, there will be a great opportunity. Now, I cannot know right now whether I'll be going long or short there. I'll have to wait and see what happens when we get there. But I just know I'm not going to force trades prior to it. I'm going to be patient and wait, because that's my edge. 5 minutes to market open. 5 minutes to market. Tape says, do you use the ES when trading the NQ when it comes to market profile and volume profile? What would be your approach? So, boy, this is a tough question to have an exact answer for. So in terms of market profile, you trade the NQ exactly the same as the ES. So we could pull up the NQ right now and I could give you the same analysis looking at the Q. Let's do that. Okay. So yeah, NQ not the same as the ES, right? Looking at it as a market profile. NQ actually more bullish than ES here. Okay, so why do I say that? Well, the NQ is one time framing higher. It's not in balance. The NQ had overlapping to higher value yesterday, not value inside the previous day's value. So the NQ actually has momentum up. It's not a ton of momentum, right? It's not going that far, but it does have momentum up, and that is bullish. Okay, so you should be bullish on the NQ. Neutral to bullish on the ES, straight up bullish on the NQ. And again, same thing. Because of that liquidation break in the overnight, that should have strengthened the market. It should give buyers more momentum to keep this thing going. So it's exactly the same as the ES in the idea that if you get below Friday's low, you're going to liquidate down to that overnight low. Okay, so there's great edge down there below Friday's low for a short. Prior to getting below Friday's low, there's no reason to short NQ today because the higher probability is that you're going to head up towards 25,850. Okay. And monitor for continuation higher from there. If I was looking for a chop zone this morning on the NQ, an area to be cautious, I would basically just use the opening price from Friday. So 25, we'll call it 25,600 as my low. And the overnight high, 25,745 as my high. And I'd be saying, let me not mess with this in the middle. But if you start to get new buying up here, you can absolutely target Friday's high. And if you start to get new selling down here, you can absolutely look for a move lower. If you're looking for a quick scalp, a scalp to Friday's low, and then monitor for continuation lower from there. Okay. So as far as market profile is concerned, you just read it the same way, no matter what chart you're looking at. Any chart on earth. All that the market profile is doing is just plotting out the data in a way that makes it easy to understand where things are tapering off, where things are changing, right? That's all it does. And that's your edge is recognizing where is the market going to suddenly stop being bearish and become bullish? Where is it going to stop being bullish and become bearish? Now, as far as the idea of using ES to trade NQ or using NQ to trade ES, it's very, very tricky. This is the best way I would describe it to you. First off, they don't always move together. You have days where the ES can be going down and the NQ can be going up or vice versa. So always keep that in mind. And I would generally say that if they're both moving in the same direction and they have momentum, you can trust that that momentum is going to keep going. So that gives you more confidence to enter a trade. It gives you confidence to maybe size up, whatever your approach is to having confidence in momentum, right? Or if both markets are going sideways, you can have confidence in balance. You can say, this thing is definitely going to keep grinding sideways, and then you can feel better about your reversion to the mean trades, right? But if there's push-pull between the two, where it's like one is trying to break higher while the other one's trying to go sideways or whatever, which is actually happening right now, right? NQ, one time framing higher, ES going sideways, that's when you know to be more cautious. To not really trust the move in either market, to not really trust the move as much because there's push-pull happening between the two. Now, does that mean I would say don't go long the NQ because the ES is going sideways? No, of course not. But it might mean instead of taking a long, for example, at the overnight high and targeting the previous day's high, maybe I just target this large node. So maybe I look for a quicker trade and I lock in those profits quicker. Why? Because I don't trust the move as much if there's push-pull between the two markets. Okay. But you have to understand there's no exact mechanism where they always go the same place at the same time. It feels that way a lot of the time because obviously they do move together for the most part. But I've seen many traders get thrown off by that, by getting too obsessed with one market is doing one thing and the other is doing the other. So that means this or that has to happen. They can go completely opposite directions. They absolutely can. Okay. So the market is open. We are in a chop zone. Oh boy, actually we're going to be in a chop zone once we dip back below the opening price. There we go. Now we're in a chop zone. So that chop zone is basically going to be the opening price, 69.58 down to yesterday's low, 69.25. If you want to look for scalps inside of there, you absolutely can. But just keep in mind, the market can reverse at any moment. Okay. I'm going to go ahead and mark some support levels here where I think we might get a bounce, and we will just see if we do. If the market crosses through the opening price now, I would be bullish to head up and test 69.64. And there it is, bullish to head up and test Friday's high. Okay, so we are now above Friday's high. That is bullish to see. And here is where we have to start asking the question, what happens up here? Do we taper off? Do we spend less and less time, bring in less and less volume, and then turn around and come back down? Or are we able to stay up here and spend more time and bring in more volume, in which case we keep going? So I would describe myself as bullish as long as we stay above the opening price and looking for that exact area to be support. 69.58 to hold as support for continuation higher. And you say, Charles, I don't understand. We opened inside the previous day's range. How are we instantly making this big fast move to the upside? Well, it's because everyone woke up that was bearish on Friday and decided, fuck this, I'm out, right? It's that psychological effect. It has nothing to do with the amount of volume down there. It's just the fact that price made the move and couldn't stay down there. You know, those bears from Friday would have felt great this morning if we'd have opened with a gap down, but instead they saw that we reversed and came back up. So they're like, get me out of this trade. And that's how we immediately get to Friday's high. But no worries. All that matters now is what happens up here. Can we keep bringing in more buyers? And if we can, the market will keep going up. Things are moving. Okay. James says the overnight inventory has many holes. This must go down. If it must go down, it must stop going up right now. So basically, we're now looking to repair the week reference at 69.69. That's Thursday's high. If we get above there and we do what we're doing right now, what are we doing right now? We're bringing in volume to keep going. If we get up there and we bring in volume to keep going, there is no reason the market needs to go down today. This is a breakout of balance. So the market can go up today purely squeezing the shorts from Thursday and Friday. We don't even need to convince anybody to change their mind. Just squeezing those shorts is going to take us up. Okay. For us to go down today, we need to literally right now, I would say over the next 30 minutes or so, we need to run out of steam and come through the opening price. If we come back through the opening price now, yes, it's bearish to dip back down. But right now we're breaking away from from balance. Balance leads to momentum. Momentum leads to balance. We can see that if we just look at the market on a daily time frame. Sort of the easiest way to point this out. Okay, so, man, I got stuff popping up everywhere here. Go away. Right. So you see this right here? This is momentum. The market is moving in a direction. This is balance. This is momentum. This is balance. Momentum. Reversal. Balance. Momentum. Reversal. Balance. Right? So balance leads to momentum. Going sideways, however long you need to go sideways, leads to your next move, your next directional move. Whenever that move runs out, it leads to going sideways. Whenever that runs out, you either pick a new direction or you keep going. So balance, momentum, balance, momentum. The market is always doing that. And we just had 2 days of painful, really tight balance. So this market is ready to burst. It's ready to make its break. And if we can bring in new buyers right now at Thursday and Friday's high, that's the sign the market needs to know it's ready to burst. So the question I'm asking myself now is, can we turn either Friday's high around 69.70 or Thursday's high around 69.64 into support? If we can, we keep going. It's a bullish, but they gotta hold it. Okay. As far as intraday, short-term trades are concerned, this market is getting itself a little bit overly long here. It does need to dip back into support. So that might be at the previous day's high, or might be, sorry, at Thursday's high, at Friday's high, or the overnight high. But this market does need to pull back in here. We've cleaned up all the weakness. We've given a chance for the market to squeeze all the sellers from Friday. And so now we got to have a chance to bring in those new buyers. I'd like to see the market dip back in here a little bit so that the ticks can come back to zero. Then I can feel more comfortable that this momentum is going to continue. So I'm now watching the order flow for a change. So far, they've just been throwing more volume higher, and that's been pulling price up. And they have not been adding anything below to try to pull price down. But looky, right now, they're starting to add that liquidity below. So they're trying to bring this thing back down and test this support in the next minute or two here. Good morning to Trader, Dan P. Stephen, thank you, sir. Good to see you as well. Greenhorn Bull says, can you give us your thoughts on how to read order flow? So my thoughts on reading order flow is very simple. It is about changes in order flow. So here's the thing. You know, they'll tell you a large node of liquidity, just meaning like the dark, bright areas, right? The darker areas, it's a magnet for price. Price wants to go there. It wants to fill that liquidity. And that is absolutely true. But sometimes it actually pushes the market away. So if the market is moving in a certain direction and say it's moving up and all of a sudden they start to put a bunch of liquidity above, think about it like this. And this may seem a little counterintuitive, but just hear me out as a way to try to explain it. Imagine you're going long right then, and then suddenly you realize, oh no, this isn't going to go very far. I'm only going to get another, 5 points until we push into the resistance. So you go, okay, well then I'm not going to go long, right? So all of a sudden the market's going up. You start adding liquidity above. Guess what that does? It actually scares price away and price goes down, right? So that order flow showing up or disappearing can both push a market away and pull a market to it. And so you're like, but Charles, those are different things. So how am I supposed to know at the moment that liquidity starts to appear? How am I supposed to know whether it's a magnet or not? How am I supposed to know? Well, you look at what was the market doing prior to the moment it appeared, and then how did the market react once it did, right? So looking at this morning, what do they keep doing? Okay. I mean, we've only been open for a few minutes, so I don't have a lot of data to work with here, but prior to the market open, they put all this liquidity up here. Let me switch colors so it's easier to see. They put all this liquidity up here. The market opened at 9:30. What did it do? It went up there to fill that liquidity. So what did they do? They were like, okay, the liquidity is acting as a magnet. It's pulling price to it. They started to add more liquidity higher. You see where it starts to appear? Right there. So at that moment, that's when you as a trader start to ask yourself, is this liquidity going to flip the market and send it back down? Or is the market going to keep going? Well, in this case, it started to go down and they added more liquidity. So it turned around and came back up. Then it came through to that one. Then it came through and it started to head up for this one. Okay. So what did they start to do then? They started to add liquidity below. So they're trying to say, okay, you've gone far enough up, come back down. Let us test these previous highs. Let us find out if this is real support. And if it works, they're going to keep going. They're going to keep adding more longs to their trade, right? And by they, I mean the whole market. I mean, I'm not saying that there's like a secret society that's controlling everything. I just mean like all the market participants, you, me, Wall Street, everyone. Like this is how it works. We're all looking at the same data. It's the same price. Market goes there. We all have to make a decision. Is it going to go up or is it going to go down? Changes in these order flows let you see what decisions they're making. Speaking of which, right now we are turning Thursday's high into support. Did you see that? We dipped down and it became support. Not once, but twice. So that means we're going to keep going. That means we got more momentum up. And we just keep going one tick at a time. How does it change? How does it change? What's next? What's the new information? And the more time you spend understanding the market through this lens, the easier it is. So stop saying, order flow being added means the market's going to go to the order flow. Stop doing that. That's not how it works. Sometimes it pushes it away. Sometimes it pulls it. Be a little more nuanced. Let your brain ask questions and analyze the information in real time. And then all of a sudden you get better and better at sort of sensing what the market is going to do next. You don't really have to literally explain every little change, but you just look at the chart. You see that there's more liquidity above. You see that the market is drifting into the liquidity above, and you assume we're heading up to 69.80, just like that. And that's when it becomes helpful. But you can't look at it through like, oh, the market always does this exact thing every time, because then it gets confusing. You have to be open to just reading the information based on that moment, what it's telling you. And that's when your brain will develop that ability to, recognize patterns. And that's your edge. That's what we use order flow for. Now, the other conversation that we talk about using order flow, specifically with Bookmap, is their stops and iceberg setting, which just basically helps us understand where larger players are being forced to participate. When you start to see larger players getting in through icebergs, you assume the market is going to keep going in their direction. When you start to see larger players getting stopped out, you assume the market is going to reverse, right? If you look, just here, we had momentum, and then somebody got stopped out for 500 contracts. And then what happened? We ran out of momentum for a few minutes. So the market was just drifting up to take out those stops. Now, fortunately, we brought in more buyers and that kept the momentum going. But when you see those large stops taken out, that's when you go, maybe I should reassess things. If I'm long, maybe I should move my stop or take profits here. Having those little pieces of data help you to have an edge in executing your trades. So the market profile gives you the edge in reading the market and predicting where it's going to go next. And then order flow gives you the edge on actually hitting the button and executing the trade in the moment. Okay, so the next target to the upside is 69.85. There's a chance that might be all the market needs today. It may just need to be, it just wants to kiss 85 and then it's going to reverse and come back down. Okay, so as long as we are above 69.64, I am bullish to head up to 69.85, and then we'll look for that taper, which we have not had yet today. So what's happened with volume so far today? We pushed up to the overnight high and we brought in more volume. We didn't taper off. We pushed up to the previous day's high. We brought in more volume. We didn't taper off. We pushed up to the high from Thursday. We brought in more volume. We didn't taper off. So that's my question. When we get up here to 85, does it taper off and then reverse and come back in? Or do we bring in more buying? In which case we're heading up to 90. Will in the house, good morning to you. Laura is here. Arjit, Tom. Oh, man. Tom, yes, thank you. I used the wrong email template today. Sorry, guys. I just sent the link for the Brigade stream and not for this one. My bad. Well, I'm glad you found your way here anyway. Maddie says, can you give an example of a market maker's absorptions versus distribution concepts in Bookmap? If I see something, I'll say something. I don't see anything like that right now. There's nothing market maker related happening here. Again, we're just squeezing the people that shorted last week. Right? Just look at the stops. Each new high that the market is making, it's taking out a bunch of stops. So that's all it's doing right now. It's just going up to take out all the stops from people that were shorting last week. There's nothing special happening here. For market maker thoughts, I generally tend to look at options data through the lens of spot gamma. Which is bullish right now. Willie in the house, good morning to you. ID says, what time frame is your footprint chart and Bookmap? So it's not a footprint chart. It is a market profile chart. It's very similar. It's basically the same thing, but this is volume profile, so not footprint. What time frame is it? Well, each TPO is 30 minute. So it's kind of like a 30-minute candlestick. There's no such thing as time frame with Bookmap. It's just a matter of how zoomed in you are. So I could zoom way out and I could look at the market over the last few hours, or I could zoom in and look at it over a millisecond. You know, if your brain is able to process it that quickly, you can look at how it changes every fraction of a second. You can just zoom in or zoom out as much as you want. So the order flow doesn't have anything to do with time frame. It's just where are orders right now in the order book every minute of every day. That's all order flow is. We use time frame to understand price action, which is where price goes or doesn't go over a given, period of time. But liquidity has nothing to do with time. It's just where is the liquidity and when does it appear and disappear? The liquidity can sit there for 10 seconds or it can sit there for 10 days. So it doesn't really matter. Is there liquidity there or not? That's really all we care about. Okay, so we are getting buyers at the high. We know that because the ticks came back to the zero line. So that means this momentum is going to keep going. I will just say, for what it's worth, and I'm not trying to tell anybody how to trade, one might consider taking profits somewhere between 85 and 90. Okay, because I would describe this as a market that is getting itself overly long, overly fast. It needs a dip. It's not quite had a chance yet. This was a little mini dip right here, but it wasn't really enough. So right now we're just squeezing shorts, and we'll keep going as long as we keep squeezing shorts. I mean, it'll shock you how far the market can go just squeezing shorts, but we really need the market to have a chance to pull back in to these previous highs to bring in those really good buyers that'll keep it going all day. So I have a feeling while it is going to make another poke up here, it's running out of steam pretty soon. So if you are longing the market, you should start looking to take profits somewhere around 85 to 90. You can always re-enter the trade if the market keeps going beyond there, but I have a feeling that's where it's going to run out of steam. Meat says, seeing current market orders. No. So what you have to understand is back in the day, the futures were the most liquid asset in the market. If we're talking 10 years ago, futures were the most liquid asset. So market makers were using futures to push the market around however they needed, right? That's not true anymore. Nowadays, the number one market with the most liquidity is the options market. And in particular, the options market that has the most effect on intraday price is the 0 DTE options market. So essentially what options expire today, those actually have the biggest influence on price movements. So generally that's the most valuable data to look at if you want to understand market makers, right? Like is there risk for 0 DTE options? That's what you want to know, because those are the options that expire the soonest, which means they have the highest gamma, which means they are the biggest risk to the market makers if it goes against them. So if you want to know what market makers are going to do, don't worry about futures volume. That's not going to tell you. Look at the options data and the gamma levels and pay attention to what's happening with gamma in the options market. And you'll just notice the futures will tend to play along and do whatever the options data wants done. So like I say, I'm not going to go into that right now because this is a Bookmap stream and we're here to promote Bookmap. But yeah, order flow is about recognizing changes in the market right this minute for day trades right now, right? That's what we use it for. And we're looking for changes in order flow to indicate those opportunities. And I'm not saying there aren't other ways to use order flow. I'm just telling you how I use it in my own personal trading. So Jake says, what edge does Bookmap provide? That's the edge. I just explained it. The edge is recognizing the change in market behavior, right? So what am I looking at right now that's giving me an edge using order flow? Well, one, so far today, by adding liquidity above price, prices continue to move into liquidity. So that's my first edge. Where's the liquidity? Well, right now it's above price. So where's price likely to go? Up, right? What's the other thing? We're taking out large stops on the way up. So what is going to be the sign that we're done going up? When we stop taking out large stops. If we make a poke up and there's no stops there, then we're done going up and we're going to turn around and come down. Look, poked up, took out stops, 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 poked up, took out stops. It's still happening. It's not over yet, right? We'll know when it's over because we'll see that it stops taking out stops. Okay. So you're looking for changes in order flow. And when you see it, that's when you either take profits on your long or you enter your short based on that change in order flow. So let's just say in a hypothetical right now, out of nowhere, a ton of volume were to start to pile in right here. Oh my God, it just starts turning a little bit yellow and then all of a sudden it's orange and then it's straight up red and they just keep adding more and more volume. Well, guess what? The market's going to dip back down. 5 seconds later, it's going to dip back down. That's your edge, recognizing those changes. But right now, that's not happening. So nothing has changed. So we're still going up. It's just the way it is. That's just the way it is. Do-do-do, do-do-do, do-do-do. That's just the way it is, it is, it is. I'm sorry. I'm so sorry. I'll stop. Greenhorn says, I have been studying in the Bookmap Learning Center on this too. Nice to watch your interpretation. Thank you, sir. Yeah, the Bookmap Learning Center is a great place to start. A lot of times brokers have kind of like shitty educational stuff, but Bookmap did a really good job with theirs. So if you head to bookmap.com and just head to education, what's great about the way they've set up their videos, they've got all these different courses. It's like 2-minute videos. It's like 2 minutes, 1 minute, 2 minutes. And so it's not overwhelming. It's not like you're trying to learn too much. It takes each concept on its own and explains it to you. So if by the end you don't understand that concept, just rewatch that video. Give it another 2 minutes. And if you go through all the free education that they have on this platform, you will be an expert on trading order flow. You'll be a king. You just got to put in the time. Okay. So the volume tapering off here is telling us they're trying to force the market down. Okay. So if we get a dip, that would not be bearish to see here. We would be expecting support and continuation higher. If they poke through, so if they get above 80 right now, they're going to squeeze everybody that's been shorting for these last few minutes. Here comes the dip I just mentioned. Here comes the dip. Okay, guys. Well, unfortunately, I got to bring this stream to an end. Thank you all so much for joining me today. I really appreciated it. If you are interested in joining the brigade and hanging out with me every morning for the first hour of the day, you should do that. It's only $20. It's $20 a month. You get to hang out every day and get my insights and ask me lots of questions and learn how to trade the market. So it's a deal. We'd love to have you there. If you are interested in joining, you can see there's a link in the top of the page here, piratetraders.io/join. Just head on over. $20 a month. We'd love to have you. As far as the way I see the rest of today going, this might sound a little bit confusing, so hear me out. Let me walk you through what I think is happening here. I think the market wants to head up to this area around, 85 to 90. Okay. At this exact moment, it needs a little bit of a dip. I got my two support levels here. One is at 72. One is down here at Friday's high around 65. If either of those levels hold as support, we are heading up to 85. That's the next spot the market is going to go. If they cannot hold as support, if the market starts to drift back down into yesterday's range, into Friday's range, then this might be the high of the day. And we might spend the rest of the day inside of Friday's range. Okay. So the buyers really want to turn this area around Friday's high into support if they're going to keep going and get up there to 85. Okay. I do believe that is what is going to happen. I think we're going to find support and keep going. As I said, if we don't, then we're pulling back into yesterday's range. I see no reason to head all the way down towards yesterday's lows. So if we did turn around and come back into yesterday's range now, we'd probably just go sideways, something like this the rest of the day. Okay. We don't necessarily need to head all the way back down. Why? Because of that liquidation break in the overnight. Okay. So for now, my target is 90 to the upside. If they, as far as like whether they can keep it going beyond that, I honestly can't predict that right now. I'm feeling like they won't, especially if they do it right now in the B period, then that will probably be the high and we'll run out of steam up there. But if they can come down, find supports, and then slowly work their way up there, then yes, they can keep going much higher from there. And same thing we talked about, looking for new volume above the previous day's high. It'd be the same thing up there around 85 to 90. You get up there and you get new volume, then it can keep going. Okay. So I would describe myself as bullish as long as we are above yesterday's high. Thank you guys very much. If you are a member of the brigade, head on over to the private stream. Let's set sail. If I missed your questions, head on over to the Discord and throw them in there, and I will answer them whenever I get a chance. Thank you very much, and we'll see you next week.